Cryptocurrency has been a big topic of discussion for a long time, but it's really gone on a parallel path to Wall Street. And now with a large mega cap company getting listed, being publicly traded at probably more than $50 billion of market cap, the two worlds will collide and become intertwined. It's going to become clear that crypto is a giant asset class with $1 trillion, is very relevant to the future of the delivery of financial services, and Coinbase is going to present that moment to the marketplace.
And is Coinbase going to be directly linked to the gains or falls of Bitcoin itself, or is it sort of agnostic to the price level and which of the cryptocurrencies is doing best?
That's an important point. One of the things that's really interesting and attractive about Coinbase is that they're going to do well regardless of which crypto asset does well. They're diversified across crypto assets. So the investment in an individual crypto asset has the risk of that not being the right one, while investing in Coinbase is going to allow investors to say, regardless of which crypto asset does well, Coinbase will benefit. And since it's a very well-managed firm, it's really the standard bearer in this industry. It's got great user experience, very secure, very compliant and regulatory friendly. They're going to be in a position to gain regardless of which crypto asset, which blockchain technology succeeds.
Gil, how does Coinbase primarily make money?
It's really trading volume. So either consumers buying and selling crypto, or increasingly institutions buying and selling crypto. They take a cut of every transaction, and that's right now a vast majority of their revenue. But increasingly, they're starting to provide other services, such as subscription services, that will become bigger parts of the business and hopefully smooth out their revenue and earnings going forward.
So looking at your model and your note and price target, it's a pretty rich valuation. I get the bull case you're explaining, but we're talking 20 to 25 times sales.
If you think about what the comparable group is for Coinbase, it's gold standard companies in open-ended growth categories. So think, you just discussed Snowflake, Zoom, Okta, companies like that, CrowdStrike. These are companies that have a huge category that has open-ended growth, and they're the gold standard in that category. They trade at anywhere between 30 and 70 times revenue right now. So to the extent Coinbase does well, has a good listing, provides some good guidance going forward, has good current period results, they'll be in a position to get those kinds of valuations.
Gil, I get what you were saying, Wilfred, about the diversification, but what if the price of Bitcoin gets cut in half? What if it goes down below that, back down to 10,000 from 50,000? This has happened before. What happens to that Coinbase stock?
Well, that's right. And Coinbase will not do well if there's a decline in the price of crypto assets. If there's less volatility, they don't do as well. Their growth has not been entirely smooth. Parts of their growth are smooth, though. Their user growth is very smooth. The amount of people trading on the platform, the assets they're gathering, those are smooth. And increasingly, those will smooth the overall results. But it's not going to be the same as a SaaS company that just builds on the same levels of growth all the time. There will be more ups and downs. It is a more risky investment. But again, there's a tremendous amount of upside if they continue to be the gold standard in the category.
Shepard Smith here. Thanks for watching CNBC on YouTube.